The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, what is going on in these markets? Grains in particular, just kind of continuing a downtrend here this week. Wheat, soybeans, especially corn, though, getting in on the action. There's a lot of downward movement here post last week's activities and festivities and more. Let's talk about what we're seeing in these markets. Joining us for analysis here today, Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, good to catch up with you while I'm spending some time at the NAFB convention at Kansas City, and you are at your office there in Wisconsin, keeping an eye on these markets. Brian, what's going on? It's just been a tough week in the grains and oilseeds here.
Yes, one of my farmer customers said today, he said, I think I'll just turn the screen off and go do something else. It's been a challenging week. So what's the driving force? Well, let's kind of look at maybe some of the what ifs here, or maybe some of the blame or whatever you want to call it. But the forecast, first of all, for South America continues to look conducive through the rest of November, probably even into the first week of December for weather. So you don't have much of any weather disturbances of consequence. That's one. Two, you've got a real heavy looking technical picture the last couple of days when prices broke through some support. Did some good market moves upward. And then after the November 8th USDA report, you've seen a couple of things happen. You saw the report was old news, but more importantly, Jesse, the value of the U.S. dollar has just been screaming higher. And as it has moved higher, you have that inverse relationship with U.S. wheat prices, and they have been nothing but on the decline. And it looks like the fund money has been selling almost every day. So the managed money has either been going defensive or deciding that they don't want to stick with too many longs at this point. Whatever the case, that's been a big problem. When you look at the U.S. dollar, it's just had a big surge. Now, whether that's a reflection of just more confidence in the U.S. versus other countries or what have you, but I want to put this in proper perspective. Since about September 30th, when the dollar at an index dropped down to, let's call it 100, right now it's trading at 106. That's a 6% increase in value in just a very short period of time. That is not good for U.S. products that are trying to find demand in overseas markets.
Yeah, and I just think about that dollar screaming higher here. Obviously, a natural headwind, plus at a time, too, where, farmers wrapping up harvest and in many cases, lock the bin doors here to some degree. So I think a lot of things capitulating on top of each other right now.
It is, but to be fair about it, though, if you look at the corn market, that was down 7.5 in nearby December today, and it closed back under 420. But last week was challenging 434. That's the same high that we saw the first week of October. That's 50 cents off the low. If I take 50, divide that by 385, it's a pretty big percentage increase. To the tune of 12.9%, almost 13%. Typically, when you get post-harvest recoveries of that 10 to 15%, farmers do sell. And we saw some basis pops. We saw some things that really gave the market reason to see farmers pick up some sales. Technically, the market went right up against a resistance point, ran out of gas, upper Bollinger Band, ran out of gas. So I think the traders were defensive, exit longs, and maybe even establish short positions.
That's a good point. Good point. And you look at some of the chart damage that we're maybe doing now. You mentioned December corn closing below 420, soybeans getting some 9 handles back on here. Wheat has been in a free fall. I mean, as you look chart wise, Brian, is there any of these markets on the grain side in particular that really concern you now? Are we doing a lot of chart damage here?
Yeah, we've done a lot of chart damage to wheat this week. It consolidated for 2 weeks, broke through that support, broke through what we call the Bollinger Band, failed here 10 days ago, 7 days ago, 15 days ago to get above moving averages that it kind of gravitated under. And it's almost back down to the contract low. So, as an example, December Chicago wheat low of 542 back at the end of August. Today's close 548 and a quarter. We're very close, and that's after a rally where everybody kind of breathed a sigh of relief, thinking the low in for the year. We hit 639 on October 3rd. So 639 to where we are today, that's not very impressive. 639 to almost 539. It's almost $2 down in wheat. That's a tough one.
What could producers
Almost a
think
dollar
about
down.
here?
Excuse me.
Yeah,
Yeah.
yeah. What could producers think about to manage their risk in the grains here right now? I mean, if it's one of those things where we had such a nice rally and folks may have gotten a little bulled up, and then now here we're seeing a pullback, and they're thinking, "Oh, I missed the boat." But to some degree, they maybe haven't quite. I guess just from an overall risk management standpoint, what's some things we should think about right now?
Well, think about things like this: carry in the market. There is carry in the market. So, can we defend that carry? Do we do that with something aggressive like hedging, which means to me that means selling futures. So you're selling on paper what you've got in the bin. Your hope is that in the bin you get basis improvement on that and or price improvement, and you're not married to the hedge. You can get out of it. So it could be a shorter term sort of stopgap if you sell futures. Otherwise, with that carry in the market, the thing I would continue to encourage farmers to think about is we've got bigger inventories. We've got a dollar that's higher. To really change the trend into a bull market, it's going to take something more than we're seeing now. And what we are seeing now is good export sales, but we need to have another dot or two connect. I don't have that weather in the southern hemisphere. There's just nothing on tap that throws that at us as something really bubbling there. So I would look at the option market, and I would look at buying puts or buying puts and then challenging the market to rally by selling calls. Now that's a strategy that's got merits and it's got a lot of drawbacks, and you want to understand the risk of that strategy. It's called a fence. But those are the kind of things that, well, just because the market isn't moving the way that we want, isn't that doesn't mean we should not look at what could be important for us as risk defenders. And when I say us, I'm talking about farmers.
Very true. Well, of course, that risk of trading futures and options is substantial. We always want to remember that. How about over in the proteins? I have to think a higher dollar weighing on cattle and hogs as well this week, especially Thursday. Kind of just a downtrend day there as well.
Yeah, right across the screen, just about everywhere. So I think the dollar is weighing on just egg commodity markets as a whole. But there again, the technical picture, we had this cattle market hold up probably a little bit longer than I think most have expected, closer to the upper 180s, maybe in 190 in cash, and now that's backing out. Weight gain has been good, ample supplies. Marketplace can it curb upward in demand? It's going to take a little more than $5 or $10 off of cash live cattle to really, see that move back into the consumer department. So I think it goes back to kind of we heard this term again today: inflation, sticky inflation.
Mm-hmm.
The consumer is just not going to the grocery store and seeing a break, and you have that at a time where the dollar's up, the technical trend is turning lower, and I think you've got traders selling. And that's exactly what happened, I think, in the hog complex today, where it really got battered. Once it broke support, it lost about a dollar in a half hour. That's the type of market that we're dealing with right now. So good prices in cattle and hogs yet, not great prices. Defend those prices. Grains, be patient for rally opportunities. Set your targets above. Keep selling cash on rallies. We had a rally in beans. We had a rally in corn. Chances to sell some, but be patient. And if that doesn't work for you, then use the option strategies: buying a put or buying a put, selling a call.
Absolutely. Brian, dairy market, should ask you about that real quick. Any notes for us there this week?
Well, dairy takes its cue really from the cheese complex, cheese and butter, right? And cheese and butter have been on a defensive trend for some time now. For example, the barrels and blocks, 165, 167 area. So it's $1.65 or $1.67 per pound, or if you want to switch it to hundredweights. But typically, you can kind of add those two together, divide by two, multiply by 10, and that's about what your uh, 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 Class 3 price should be on the board.
Hmm.
Class 3 is still running a premium to that. It's been in a downtrend. 1985 on November milk, down 12 as we speak. That is the lowest price on that contract. Believe it or not, you got to go back to July. So all that rally and bullishness we had, again, rising dollar, concerns of demand, sticky inflation. It seems to have kind of taken its toll, and just the general expectation. Anytime you're above $22, $23 a milk, you're going to get some retainment of cattle or heifers to try and grow the herd.
Absolutely. Brian, always appreciate the time, the insight. Folks want to reach out to you there at Total Farm Marketing, have a conversation about their marketing plan, managing their risk. I know a few different ways to get in touch with you. How can folks get a hold of you?
I'd ask for a phone call first, and that's our best way and best way to communicate ideas. 800-334-9779. So phone call, otherwise Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. A lot of great resources there.
Always appreciate it. And I know we'll catch up with you next week before we get to Thanksgiving. For now, though, we'll let you go. Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks again. Always appreciate it. Have a great weekend.
Yes, sir. Thank you very much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.